You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday. Yep, you thought you were going to catch me. Third day of September 2019. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you cannot see the chart I'm about to put up, that would be that chart. Can't see it, go to our homepage at cfrn.net. On the right-hand side, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. On the days you're away from the office, can't get to the desktop, not a problem. Just go to youtube.com/CFRN/live, and there you'll find a live real-time simulcast of the show as it unfolds, brought to you by the good folks at YouTube. Thanks, YouTube. All right, Sunday night, I hope you all had a great holiday, and we continue to pray for all the folks on the East Coast in the path of Dorian. Encourage you, please do the same. It's going to be bad, but it's not as bad perhaps as it could have been, and it's the rebuilding process. So right now we pray for lives to be saved, and then we'll be praying for them to get that thing put back together again. That's by the nature. It happens. And of course, people who live along the coast know that that's kind of part of the deal. You hope it'll never happen, but you have to be prepared for it when it does. Okay, the chart I have up, S&P 500 Emini Futures. It is a 30-minute chart. We had a gap lower open Sunday night on Globex. And if you've been hanging around here for any length of time, you know that one of our absolute favorite trade setups is that Sunday night gap fill, because Sunday night's about the only time we really get a gap. Sometimes we do in earnings season, but because futures trade 23 hours a day, there's not a lot of time for the stuff to happen with the market closed. Stocks, they gap practically every day, many of them higher, lower. Futures a little bit different, and the unique thing about futures, the indices in particular, is that the gap almost always closes. Often the same night, most often in the same session. And as you can see, we closed this one on the Dow. Let's take a look at that one. Okay, there's the gap, and there's the fill. Oh no, I take that back. The close on Friday was 26399. This swing high was only 372. I'll have to check our alert on that one. That's still unfilled. On the Russell, gap lower open, gap closed, and the NQ. Gap lower open, gap closed. Crude, did we gap on crude? Yeah, just a tiny bit, and it closed. And on gold, we gapped higher on gold, not lower. And the closing price on Friday was $13.29.20. And the swing low here was $13.28, so that's a good gap fill. Okay. All right. I got a little bit of news, but I'm going to save that till after Michael does the recap. Let me give you the numbers real quick from around the world. We'll start here in the U.S. Let me get some fresh data. Okay. The Dow is currently down 329 points. NASDAQ is down 73. S&P 500 down 21. And the Russell 2000 down 20. That's basically 1% or better for all of them. The exception of the S&P, 0.75%. In the commodity basket, crude oil down $1.60, trading 53.50 last. That's a drop of almost 3%. Gold, go gold, up $28.10, trading 57.50 last. That's a gain of almost 2%. In the Asian markets at the close, the Nikkei posted a gain of 5 points, Shanghai gained 6, and the Hang Seng lost 98. And in the European markets, FTSE finished the session down 13, the DAX was down 42, the CAC was down 26, no movers and no shakers. That gives us a mixed day in Asia, red day in the UK, and it's a big red radio Tuesday so far here in the US of A. Let's go to Michael, get a recap of exactly what happened in the live training room this morning. When I come back, we'll talk about Concierge Trade Alerts, talk about Logic 247. We've had a number of swing trades since I last spoke with you. So we'll cover all of that, talk to John, and of course, answers to your questions. Michael, it's all yours.
All right, I got it.
I guess there was...
there was one question.
Yeah, from Roy. Is the gold trade already with everyone on one side of the boat? Well, that's a good question. I don't know that I know the answer to it, but I'm going to follow that link that you gave me. Oh, how come you can't copy these links? That's kind of...
I know. We used to be able to. You know, let me try something.
Does he have access to... Do they have access to that other chat box?
Yeah.
There's another chat box. Roy, if you could drop that link in there, I would be able to click it. And the chat box you put it in, unfortunately, I can't. But I would like to read that article and see exactly what the story is there. But let me just drag these charts up, Michael, and you can...
Okay.
Get busy. Okay, there it is.
All right. We just had an awesome gold trade.
Did you?
Yeah. Yeah, 56.7 down to 53.5. That's a $220 gold trade.
Nice. Very nice.
All right. Let's scroll
I'll
back
hit mute and give it to you.
Okay. All right. I got it. And here we go. Everybody should be looking at my charts. Yes. Okay. This one. All right. Good afternoon, everybody. Today is Tuesday, the 3rd day of September 2019. If you have not taken a free trial with us, go to the home page here at CFRN.net. And right here in the right-hand column, it says 5-day free trial, apply.cfrn.net. If you click on that, you'll be brought to this page, eminitrainingschool.com. On this page, eminitrainingschool.com, you can go directly to that page if you want to. But on this page, all we ask for is your name, your email, and your phone number. And you can tell us the biggest trading challenge so we can tailor one-on-one training specifically for you. Speaking of one-on-one training, if anybody wants it this week with me, you got to email me at tech@cfrn.net. tech@cfrn.net. Okay. Okay. Results. These are our results today. Now, the markets were just a mess today. They were just a mess. But we did get the goal for the day. We got 3 ticks on crude. We lost 8 ticks on gold, and we got 12 ticks on the ES. That put us up $100. Today it took 79 minutes and 6 trades to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 7 trades. On the year now, well, I'm sorry, on the month, we're up $100 one day. But you can see last month we were up 7,216. But on the year now, we're up $24,867. That's over 157 days, averaging $158 per contract per day. Now that's one contract, 2 hours per day. One contract, 2 hours per day. Okay, Now, if you added one contract per month and did everything exactly the same way that I did, which is highly unlikely, you'd be sitting at 134 grand right now. Okay. If you were a 10 contract trader, you just add a 0 onto this down here. Okay. If you did everything exactly the same way that I did. And I missed most of the trades, to be honest with you. I'll show you that right now. All right. So here we go. Let's scroll back to the beginning. And we'll see I only had one trade on gold that I got. I missed all the good ones, and I got the one stop out. That never happens to anybody, does it? We started out right here, and I stopped out on the first trade. And at least it wasn't to the tick, you know? I hate it when it stops me out to the tick. But at least it wasn't to the tick. Then we had high impact news at 10 o'clock, and look what gold did. I had walked away for a couple of minutes at that time, and I came back right over here. And when you get action like this, usually you're going to get just a messy day. But right here at 10:04, there was a long opportunity right here. Stop would have gone to break even. I missed it. There was a long trade right here. I missed it. A long trade right here. I missed it. And there, I missed it. Every one of those trades was profitable, by the way. So when I said I missed most of the trades, it's because I'm doing something or showing you something or, doing something so that everybody can see what they should be looking for. But right there was a long opportunity. Would have gotten the goal for the day. Right here was another long opportunity. Here was another one, goal for the day. Here another one, goal for the day. Here was one that would have been a break even. Here was another one, probably a break even if I'd have done it. And then we get into the break. Now during the break, there was one trade right here that would have been a break even. And this nice one right here that I was just telling you about, that was 22 ticks. Yeah, that would have been a great trade. That was the gold for today. The euro, what do we do on the euro? We had one break-even trade right here on the euro. Now the market today has just been crazy because it's been consolidating and then a move with no trade setup. Consolidate and a move with no trade setup. Consolidate and a move with no trade setup. And it's been like that all day. There was a short here that we missed. A short here that we missed. Both of them break even. And nothing during the break. Look at that garbage during the break. That's awful. Okay, and on the crude oil, what did we get on crude? 3 ticks. And we did that right here. We took 3 ticks because that's what we need to get the goal for the day. But, crude is normally my favorite market. It still is my favorite market. I can't say it's not. But you see we had this huge move in crude this morning in the pre-market. Well, actually, crude oil opened up right here. And from the open, it tanked and tanked. And usually when you get that kind of stuff before 9:30, you're going to get a lot of consolidation after 9:30. And, crude opens at 9, right? So, just saying. There's some more opportunities in here. I see Valerie's here. She must be. Hang on. Let me see. Yeah, she's here, but she's under Dwayne's name, I think. Anyway, there were more opportunities in here during the morning session. But I'm not sure. I didn't do this one because, well, I just missed it, looks like. Or it might have been going into the low of the day. finally it changed directions, started going up, and we picked off 3 ticks right here to give us the goal for the day. And then it didn't put in a higher swing. And this was Brian S. I don't know if you're in here right now. Let me see. No. But Brian took a trade right here. But that was not a valid trade. I mean, he got 7 ticks out of it, but it was not a valid trade because we didn't put in a higher swing. That's why I've drawn that line there. We needed to close above that line. Okay. Then price moved up, but the slingshot was not giving us any opportunity. Then it started moving around, and the slingshot's not giving us opportunity. And this was the close of the morning session. Okay, there was an opportunity right here to go long and grab that leg up. And it looks like over here was an opportunity to go short and grab that leg down. And that was it for the crude oil. The ES was another one of those that would consolidate and then run, and consolidate and then run. Hang on. We had 3 trades on the ES today. We had this first one right here where we picked up 8 ticks. I didn't even see this part right here. I didn't even notice that. I noticed when it was chopping around over here, but we entered way over here. And we exited way over here. Okay, and we picked up 8 ticks on that. Then we had this one here. We picked up 4 ticks there. Then we had a break even there. Now, this is what I mean. Consolidate, then a move. Consolidate, then a move. Consolidate, and a move. Consolidate, and a move. But it wasn't giving us a lot of trade setups because of the consolidation. The consolidation was messing up the slingshot. So, I mean, like, look at this right here. Consolidate, consolidate, consolidate. Now, what it does is normalize the math. Yeah, what it does is normalize the math. When you're going sideways like this for a long period of time, and you know you're flatlined, oversold, overbought, or oversold like this, it normalizes the math. So then a small move is going to make a big move in the slingshot, and that was just keeping us out of the trades. Now that's just the trade setups that we do in the room. You know, the other trade setups capitalize on that. The 164 particularly capitalize on that, but that's because it can be counter trend. But anyway, that was it on the ES. We were plus 12 on the ES. Okay, so let's go back over here. Over here, our first day of the month, and we're plus 3 on crude, minus 8 on gold, and plus 12 on the ES. Put us at plus 100 even on the morning session. Took 79 minutes and 6 trades to get there, and we took a total of 7 trades. So up $100 one day. On the year now, we're at $24,867. That's over 157 days, averaging $158 per day. Now, last month, we were up $7,216 over 22 days, averaging $328 per day. Now, earnings season is coming out here, so we should have a lot of opportunity. You mean the regular Tuesday meeting, David? Okay. If you have not taken a free trial with us, go to the home page at CFRN.net, and in the right-hand column, it says 5-day free trial applied.cfrn.net. You click on that, it will bring you to this page, eminitrainingschool.com. You can go directly to that page if you want to. Put in your name, your email, your phone number, and tell us your biggest trading challenge so we can tailor one-on-one training specifically for you. Hit the send button, you'll be sent a confirmation link. You must click the confirmation link, or we don't know that you took the free trial. Well, they're all pretty much the same. So we have the Tuesday channel that you can go and look at. But, I can do on, I think, probably Friday. I'll find out when Jada gets home. I got a lot of stuff going on here in my house right now. And so I think I can probably do one on Friday. Yeah, I mean, the meetings, they're all in Telegram, the Tuesday channel in Telegram, and that's open to the public. That's open to everyone. So, you can go and look at those if you want to. And there's also the CFRN.net/Emini-Tuesday page. And those are probably old now, but it's the same stuff over and over and over. We haven't changed anything for years. Okay, we'll be looking back at this. 20 years looking back, saying we haven't changed a darn thing in 20 years. And we don't have any reason to, if it ain't broke. All right. And with that, I will pass it back out to fabulous Phoenix, Arizona, Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
I am ready, yes.
Okay.
So, here we go. All righty. Recap of the recap.
Today it took 79 minutes and 6 trades to get to the goal for the day. At that point, we were up $100 per contract.
Awesome.
Yes, did it again.
That's good bingo.
Day after day.
Okie doke. I see some questions. Did everything get answered?
Yeah, I answered them all.
Alrighty. Okay.
I don't know if you looked at that link. It was in the alert trial discussion group. Yeah, in Telegram.
I did. And I thought I would, in fact, I sent a copy of it to John, because I figured when he comes on, he'll want to talk about that.
Okay. All right, I can see your charts.
Okay.
Yeah.
Now, I'm going to share this with you guys real quick. I put a link in the chat box that you can actually click.
Mm-hmm.
And, okay.
Oh, wait, I'm in the wrong thing. Hang on. That was in Telegram.
Can everybody see that?
Yeah, I can see that, but it's got to be the other chat box. All you guys that are in the question box right now, there's another chat box. So you can go there and click on that link. That is a clickable link.
Okay, let me run through this real quick. We're going to start talking about this probably every day. We talked about it for a while, and then I decided that I needed to get some more information myself, get a better understanding of the company and exactly what they're doing. It is a gold-backed cryptocurrency. I think it's number 22 on CoinMarketCap right now, and a number of things are getting ready to happen with this company, with this currency. So I want to make sure that you guys have the information before stuff starts to happen. I know a number of you have already signed up as affiliates. I put the link there so the rest of you that have an interest can. The company's called Carrot Bars. From 2011 to 2018, they were concentrated on just selling physical gold and gold-based products. Throughout the course of 2018, the company has developed and implemented cryptocurrency, blockchain, and some innovative technologies, such as a crypto phone, the Impulse K1, As far as I know, it's the only phone so far where you actually are making calls using blockchain. They have a digital payment system, K-Merchant. They even have ATMs, cash gold exchange machines. To make crypto payments even easier, Karatbars went further. A new blockchain-based smartphone that I just mentioned. Now, the reason this is getting so much attention, of course, gold has increased in value against most currencies in the past few years. It is also known that central banks hold at least 60% of all the gold in the world. The person that put his money in banks then buys gold. They get 10%, you get 1%. It's an excellent deal for the bank and a bad deal for you. The problem is 99% of the population doesn't have any gold. And that is exactly how the banks and governments would like it to be. Most people wouldn't even know where to buy gold, and they think they can't afford it, and wouldn't know how to sell it even after they bought it. Karatbars and Karat Gold solves so much of this. There's so much information that one of the reasons I've held back is because I just didn't want to bury you in information. Okay? Today, that's as far as I'm going to go. I'm just going to tell you it is a crypto backed by gold. Most crypto is backed by marketing. This is backed by physical gold, and you can exchange this crypto for gold when you want to. Everything's been put. I'm really enamored with the company because I see how much work has been done. They seem to have thought of just about everything. But as with all things, you got to do your own due diligence. Okay? Do not go make any kind of an investment in anything because you heard some joker on the internet talk about it. Okay? You have to look at it yourself. You have a financial planner, an investment professional in your life, a licensed investment professional. Take it to them, let them look at it. Once they look at it, if they're good at what they do, they're going to see the opportunity. Just make sure that they sign up under you. Okay? Now I'll get into more details. I'm going to give you just a little bit each day because there's so much news that if I dump it all on you, you'll just be confused, and a confused mind always says no. Whether you say yes or no is up to you, but I want you to be able to make a well-informed, intelligent decision. So I'll be disseminating a lot of information this month because there's a hard fork in October. The current coin and the one that's now in pre-sale, one's KCB, the other's KBC. The two are going to merge on that hard fork. So I'm going to leave it at that for today. I want you to follow that link, sign up as an affiliate. It doesn't cost you anything to become an affiliate. It doesn't obligate you to anything. What it does do is it gets you into the back end of the website so that you will be able to read, study, and start to understand a lot of things that just aren't made available to the general public. So that's the only reason you need to sign up as an affiliate. You're not in the Army now once you sign up. You're just an affiliate. Okay. All right. Okay, so that covers that. We'll be talking about it again tomorrow. So let's go back to Sunday night. Gap lower open. Let me pull up Telegram. Let me go to the Concierge Trade Alerts. Okie doke. We said to consider being long 29.36. That did not happen. We also said consider being short 29.02. And that happened multiple times. 29.02 right down to the zone. By the way, these are this week's weekly trading zones. Don't ask me why. I just decided to just put them up to date. It's a short week, holiday week. Today's only Tuesday. I normally do it on Thursday, but, well, there you go. A little something from us to you. Happy Tuesday. Okay, so price triggered at 29.02. Dropped to the zone below. What would that be, 11 points, Michael?
I think so, yeah.
Yeah, $50 a point. So $550 per contract traded. And then over here we drop down to 28.94. Trigger, back above the trigger, trigger, back above the trigger, trigger, and back above the trigger and trigger. And this one ran all the way back down to the zone as well at 28.91. Important prices, important areas are almost always tested. Okay, you really need to hang on to that. Think about it. Watch the markets with that in mind. And after some period of time, be it days, weeks, months, one day the clouds will part and you'll go, oh, okay, I see what he meant. Important prices, important areas are almost always tested. So what do we have here? We had 1, 2, 3, 4. I mean, you could actually count these two. There's probably 5 or 6, 7 in here. But I just gave you the big ones, okay? And then we had a gap fill trade. Well, let me do the concierge real quick, and then we'll jump to the logic. Okay, so let's go to the Dow. Okay, gap lower open. And the concierge. Oh, I normally give you an opportunity to grab a screenshot, so if you want to grab one, go right ahead. 26,220. That would be right here. 26,220. Okay. So did we trigger multiple times? Yes, we certainly did. So from 26,220 down to the zone below at 150, that would be 70 Dow points, $5 per point, $350 per contract traded. Back above the trigger, back down to the zone. Back above the trigger, back down to the zone. Back above the trigger, and back down to the zone. And this last one took us all the way down to 25, we'll call it 980. So from 26,220 to 25,980. Alexa, what's 26,220 minus 25,980?
The answer is minus 61,620. Did that answer your question?
I don't think so.
Thanks for your feedback.
Hey Alexa, 26,200.
The answer to your
Stop.
calculation is 26,200.
Stop. Let's do this. Alexa, stop. One more time. What's 26,220 minus, well, 26,000? I think it's 220. Is that right? Yeah. That was simple math. From up here down to here. 220 point move. But you had a chance to pay yourself here, and here, and here, and here. Each one of those was worth $350 per contract traded. This one, $1,000. 200 points, $5 per point. It's $1,000 per contract traded. Okay. Russell, we said to consider being short 1481. So 1481 down to the zone below at 1471. That's 10 points, $50 per point, $500 per contract traded. And if we drag this across, Second trigger, third trigger, fourth trigger. The fourth one also ran all the way to the zone below. These two here in the middle, they got down to 1475. So that's about $300 per contract traded. Okay. If you have any questions on any of this, please just type them into the chat box, and I'll be very happy to answer your question best I can. Okay, here's Crude. Concierge on Crude. Consider being short 54.50. Here's 54.50. And from 54.50, we dropped to 52.90. So that's $500 per contract traded. From the trigger down to the zone, from 54.50, so that's a $400 per contract move right there. From 54.50 to 54.10, 40 ticks, $10 a tick. Now, from 54.40 to 53.40, that's $1,000 per contract move. This is the first one that didn't re-trigger. It kind of did right here, but well, that first move, it dropped. Well, you know what? It dropped 250 bucks. Swing low, no, 30, so 200. So that right there is a $200 per contract move, back above the trigger, and then $1,000 drop per contract. Gold gapped in the other direction, and on gold we said to consider being long 1544. That's right. 1544 is right here. And we got a swing high up at 58.90. So just the 58 from 54, or I'm sorry, from 44 to 58, that's $1,400 per contract traded. Did I get that right?
I think so.
1544 up to 1558. I think that's 14 points.
40. Yeah.
That sound right?
I think so, yeah.
Okay, $100 a point on gold. That's what it pays. So there you have $1,400 per contract move. Okay, so we did the S&P. 1, 2, 3, 4 triggers. 1 alert, 4 triggers. Dow. 1, 2, 3, 4. Okay. Russell, we got 1, 2, 3, 4. Crude, we just got the 1. Gold, we just got the 1. Okay. So that covers that. Now let's go to logic. Here we go. And we are on week number 57. Okay. So Sunday night when Globex opened, first alert coming out of the gate, consider being long S&P 2910 to 2912, trail if possible. Weekly trading zone from last week overhead is 2913/2914. So let's see how that panned out. The get long was 29.10. So that's going to be right here. Okay, the first trigger ran up to 29.15.75. So that's almost 6 points. $50 a point, $300 per contract traded. Back below the trigger, off we go again. That's 17 points up to the zone, trade to target. Alexa, 17 times 50, please.
17 times 50 is 850.
Okay, 850 per contract traded. And then we get back below the trigger and ran into, see, this was logic, long side, short side was the Concierge Trade Alert we just went over. So we triggered once at 29.10 long, twice. This time we made it up to 29.15, so that's, no, I'm sorry. We had 5 points here. We had 17 here. Another 5 here. Another 4 here. And then basically another 5 here. Okay? So 1, 2, 3, 4. Really that's 1, 2, so 6 triggers off of the 1 alert. Now you can see what's happening here with the S&P. This is a little bit unusual. Every now and again, one of the weekly trading zones will become what I call the center of gravity for the current market conditions. And what that means is price will trade below that zone. It like oscillates below, back above, below, back above, below, back above, below. And honestly, when it's doing that, it's not the greatest. I mean, we've had tremendous results here, so you can't argue with that. But I'd much rather see the market doing this. Leg retrace, leg retrace, leg retrace, right up to a trade to target where it does what we expect to happen when price approaches a weekly zone from below. We expect it to be good resistance, and it was. Sent price right back down to the zone. Okay. All right, let's go to the next one. Consider being long the Dow at 26,330. Okay. $26,330. We made it up to 365. Okay. Actually, 330's right there. So the first move was 48. So at 18 points at $5 a point. The next swing high is 372. So from 330 to 372, I guess that's 42 points. All right. So that takes care of that one. We did not reach the final target, which was 26,390. Okay. So that should read PT right there. Okay. Next, the Russell. On the Russell, consider being long 1488. Here's 1488. And the trade to target, we had an initial target at 1490. We got to 1489.6 there. This one ran to the trade to target overhead, 95.96. And this one, you probably weren't watching this at this point, but if you were, it didn't go too terribly far. Okay, we had a nice 1, 2 triggers on that one. Okay, next is, okay, we did the S&P, we did the Dow, we did the Russell, NQ. Consider being long 76.33. And that's going to be right here. All right, 76.33. The initial target was 76.43. And on the first trigger, we made it up to 51. So from 33 to 51, 18, I think, at $50 a point. No, $20 a point. There you go. And then we get back below the trigger. This time we make it all the way up to the trade 2 target, which is the zone overhead, 76.97. So from 33 to 97, that's about 60 points plus $20 a point, $1,200 per contract traded. Okay, back below the trigger, off we go again. And this time we make it up to 64.5. So 33 to 63, that would be 30 times $20 a point, $600 per contract traded. Back below the trigger, $500 per contract traded. Back below the trigger, couple hundred. Back below the trigger, off we go again. And from 33 to 73 would be 40 at $20 a point. That would be $800 per contract traded. So on this one we had 1, 2, 3, 4, 5, 6, and this little guy here 7. 7 triggers from one alert. Now, are important prices in important areas almost always tested? Yes. Are they normally tested this many times? You know, no. A couple, 3 is probably average, but we often see 4 or 5. But today, or these last couple days, was just a red letter day for seeing that put into practice. You hear me say it, you see it happen day after day. That's why I keep saying it, because it keeps happening. And apparently, if I look at historical charts, back before I ever even traded E-minis, it happened back then as well. Okay. All right. After the NQ, we had another alert on the ES. Let me show you. The next alert on the ES would have been this one, 2910 to 2912. Again, identical trade as the previous one, 2910 to 2912. Now this one, let me see, that was put out Sunday night at 11:20 p.m. Eastern. So Sunday night. Yeah, so that's going to be this one here, which coincides with a, no, I'm sorry, wait a minute. This one. There we go. Yeah, okay. All right, next would be crude. 54.95 to 54.85. And that was Sunday night. 54.95. Nope, I'm on gold. 54.95, which will be right there, to 54.85, which is right there. But then we continue down to the trade to target, 54.05/54.10. So from 54.95 to 54.10, that's an $850 per contract move. And you had a concierge trade right there in the middle of it. Okay.
John just popped in.
Did he? Okay.
Yeah.
All right, guys. Let's see. All right, now that takes us up through Sunday night, and then we have yesterday. I'm just going to show you these real quick. S&P found the target. Dow found the target. S&P found the target. Dow found the target. Russell found the target. NQ found the target. And this one here, let's see. GCLV 5460 to 5450. That found its target as well. So I'll go ahead and recap that. Hi, John. Welcome to the show.
Hi there. Thanks for the invite. We talked about the oil breaking down last week, and it's happening before our eyes. And it's, that kind of little bit of a rebound there looks pretty weak. And, we're in September now, so we're counting down the days to the UN possible meeting with Iran.
Right.
That's very negative for the oil market. So, as we said last week, it might break down into the 40s, into the high 40s, maybe even the mid 40s or low 40s again. Because we're in a the OPEC announced late last week, they're no longer restricting supply. They're actually overproducing on their so-called quotas. And by 100, it's not a big deal right now, 100 or 200,000 barrels, but they say they're going to increase production. So, there's going to be a flood of oil around the world because the U.S. is producing more and more every day. And the only good thing that's going on today.
Who was it that said they were going to increase production, John?
Russia and OPEC, basically.
Okay, gotcha.
They had a kind of a pact going on, to restrict supply, but it looks like that's broken down, and it's sort of free for all now. And that's, there's just way too much oil flowing around the world. And then with the prospect of Iran possibly coming back on and exporting, they're down to a few 100,000 barrels a day now. But they have the capacity to export a couple of million, so that would have a very big impact on the oil market. The only saving grace is the US dollar hit 99.3 this morning, but it's actually making a pretty big reversal on the day, and there's a pretty good chance that the dollar highs might be in. This is the first time we've come back from a Labor Day holiday in quite a while, where the dollar actually got weaker and the gold market got stronger. So we're on the way to possibly making a weekly reversal. If you look at the dollar today, it's probably diverging on some of the indicators, the RSI and stuff like that. Because we're making almost an identical top to the last pullback, which happened at the beginning of August. And, if this holds here and the dollar breaks down, it's a pretty good chance that the highs might be in. And the word is getting out that the administration wants to weaken the dollar. And I think that explains why gold is so strong today. And I did say this, in saying it over and over, wait till the dollar gets weak, or even hints at getting weak, and you'll see gold accelerate to the upside. Given that we're making new highs this morning, and that thing you just sent me about how the all-time record contracts, this.
Yeah, Roy in the audience sent that to me during the show here. I thought you might want to see it.
Yeah, no, that's a huge deal, because we've overtaken the 2016 scenario, which was the last time that happened. So, I got to tell you, the whole this gold buying power. Incidentally,
what
by the way,
month are you in, John, on the dollar?
Well, I'm on
September?
the. Yeah, but I should be going to December today, I guess, or almost at any time.
All right.
I see what you mean. Oh, no, the dollar's breaking down in September too. So it only got to 98.9 in September. So it's a little in December rather, so a little bit weaker. And it's making a kind of a bigger reversal. So that might be even more bearish. Kind of might be an omen, bad omen for the dollar. Anyway, look, it's probably, it might, look, it's so strong that it could still go higher. But there's a guy out there who I've mentioned before. I think it's Brent Johnson. He's been very right on the money on the gold. He's been saying, look, there's going to be a period, which we've set ourselves, where gold and the dollar would go up together, and that's basically happening. But he says that the dollar strength is, as we've said on this show, is really just causing chaos around the world. And today the bonds are at 167. Now the weird thing is the 30-year bonds are not at all-time record highs yet. They got to go to about another 5 points to go to 172, where they could potentially make a huge double top. The TLT is making all-time highs, and that is and so that reflects the sort of all-time low yields in bonds. And I mean, it couldn't be better. I mean, there's all-time low mortgages right now. I mean, it's kind of a borrower's paradise, getting better and better all the time. And it's good for the government to be able to raise money without paying good high interest rates. Now, I was watching that options action show on Friday, and something that kind of shocked me. That's a daily, right?
It is, John. Apparently, I don't have the right feed.
Because it's the end of day, you can't see the reversal. But it's right. that today is kind of gone red or going red right now, so it's quite a big deal, and it's kind of similar to what happened the last time in the beginning of August, where it basically went down. But this time it could go down a lot more if it's time for the dollar to break. We just don't know that yet. So if you could put up HYG.
I sure can. HYG.
Yeah.
Okay, this iShares Trust.
Yeah.
All right, it's on a daily.
This is if you put up, if you can squeeze it up a bit, this is a kind of a look. This is kind of going the wrong way for us to be going into recession, because you can see what happened at the beginning, October, where this thing broke down, and it tanked right into the end of the year, and look at the rebound of this thing and look at the overall structure. I mean, it actually, what does that tell you? I think it tells us that the Fed has got the pedal to the metal, even though Trump's beating up on Jerome Powell and he's probably doing everything he can to keep this economy going. And he's apparently buying bonds now, or the Fed are buying bonds, which apart from this little tick down today on that HYG, these guys on this show were sort of fairly bullish on it, and it kind of surprised me. Maybe take a look at it. I haven't looked at it for a while, this particular chart. But, if you go back to 2016, you'll see that when the last time the economy and the markets were really weak, it was, a leading indicator of that. So given where it is today, it certainly seems as if we're going to get through this. And remember, here we are. Look, we're 9 months. The economy is 9 months below, after the bottom. So, given the economy tends to follow the market, and we've had the biggest move up in 4 months, actually 6 months, from 6 or 7 months from the beginning of the year right through the highs into July. It would be kind of strange, frankly, if the economy didn't get a bit of a bounce in the next few months, 9 months to a year after this event. So, and if the economy does start to pick up, it probably is going to help the market a lot. Especially if the Fed, look, you've got Christine Lagarde potentially poised to take over in Europe. She's going to be a force I think she's going to really ramp up the European economy like you've never seen before. And that's probably going to help as well. And the situation is pretty dire because the European banks never really recovered after the 2007, 9, 11, 12 debacle. And they're in all kinds of trouble, and the Hong Kong banks are in all kinds of trouble today. I think they're so overextended. It's hard to fathom, and they're hooked up to all these ghost cities in China are being funded out of the Hong Kong banks and the Chinese banks, and that's probably another reason why the gold price is going through the roof, because the people who really understand what's going on in the world economy know that the China's probably on the point of really blowing up in imploding almost, as all these ghost cities that have been talked about for a while. It's time to pay the piper, and the pressure being put on them by Trump is just unbearable. And they think they can win. I mean, listen, they can't win. It's impossible. China is going to lose big time, no matter what, because as long as Trump doesn't relent, they're done. I mean, because if they keep retaliating and Trump ramps up the tariffs to 50%, which I wouldn't rule them out from doing, they're going to be out of business, plain and simple. And the quicker the communist regime is, removed from China, the safer the world's going to be, because they're a real threat. There's a lot of hawks in China who are out of control, and it's sort of like a Berlin Wall coming down a second time, and they'd be the last dictator one of the last dictators to fall in the world. And I think the world would be a lot better place without these remaining dictators gone forever, including the guy in Venezuela and Cuba and these last holdouts. And but China is in dire straits. There's no doubt. There's no ifs, ands, or buts about it. The yuan is falling, and it's going to continue to fall because they don't have the cash to hold up any more banks, and they're losing. The dollars. They just don't have the cash to. And look, the Chinese GDP has gone up 500% in 10 years. Their debt has gone up 1,000%. So they're pushing harder to try and stimulate the economy more than ever before, and it's not working. The economy's shrinking, it's contracting. So it's probably, look, this thing is so big that if it and there's a sort of a domino effect that could happen, not just with China, but around the world. Could even pull some of the US banks down as well. Definitely the European banks probably very much linked in with the Chinese, and they're in all kinds of trouble. So the current looks like weaker currencies. The gold is today making all-time record highs in probably 100 currencies worldwide, maybe more. That's causing people to buy more and more gold. The biggest thing, the biggest elephant in the room, if you like, is the 17, well, it's going to be 20 trillion negative deposits around the world. So where they're actually paying to put money in the bank. And, right now there's probably a trickle of money coming out of the 20 trillion into gold every day as the smartest guys, who are in that position are taking money out and putting it in gold. If they did it a week ago, they're already up a few percent. And at the end of the day, these guys have to perform. And if they're losing money on their funds, how much longer are people going to put money in a bank where you have to pay to put it in the bank?
Right.
It's kind of, it's just it's an extraordinary situation. And it could, look, remember the total debt in the world is 250 trillion with a T, 250 trillion. And here's the dangerous part. The total derivatives protecting that debt, i.e. from, imagine if the interest rates, which maybe with the help of Christine Lagarde, suddenly reverse and go positive, within a matter of weeks or days even, what would that tell you about the European economy? It would tell you that there's a turnaround or a growth spurt ahead in the economy because interest rates would start to go up if the economy gets stronger. And, if we get up to 172, and we may not get there, at some point, if just like if the interest rates start to fall, if the bonds start to fall and the interest rates start to rise, that could actually be very bullish for the economy. And it's funny, I was listening to of all people, Wayne Jets, remember him?
Wayne? Yeah.
He was on that USA Watchdog show, and he got his dates a little wrong on the gold, but he did point out, which is what we've been saying on this show, that it wasn't the gold. The gold didn't really take off in 1979 until about October. So right now we are kind of tracing out 1979 to a T, especially given the acceleration to the upside in gold in August. And the fact that we're kicking off September so strongly is really a very unusual development. Look, almost for the last decade, every except from 2012 onwards, almost every holiday, Labor Day, the gold came in lower almost every year. And look at it today; it's up $27. This is just something just absolutely extraordinary. We're only a couple of weeks away now from the rate cut, or maybe a big rate cut, which is probably going to add a couple of $100 to the gold price. And look at silver. It's $19. It's already above our liftoff point in 2010, September 2010, when we predicted it would go to $50 by the second quarter of 2011, and it's the beginning of the month, not the middle of the month.
Look at that daily
right?
candle there.
Right. Can you squeeze it up a bit? Because
Sure.
This is just, and the fact that silver is leading. Look, Dwayne, we did if I don't mind my saying so, we did an absolutely bang up job laying this out for people a few weeks ago when the silver was about 16, going on 70.
Oh, yeah, you sure did.
And we went back to 2013 to see what the price was the last time gold was at $15.50, and it's at $34. So that is such a stark, it's such a quantum leap from where we are right now that I think a lot of people started to wake up to what we were talking about, and have figured it out for themselves or heard about it, and look at and then the commercials went short, 2 or 3 weeks ago. So they're getting killed. The banks are short. What if JP Morgan is still short? These banks are getting a bit scared now at the way the silver is going up, and so it doesn't really look like it's going to go to 24, 25 before you know it. And if it goes to 24, 25, you pretty much can pretty much bet on gold getting to 1900 from here. So, we start getting up around that all-time high level. And if the dollar hasn't broken down by then as soon as the dollar does break down, as I always say, the gold will be on the afterburners, and we could run very fast to 2400.
I agree.
But remember, keep in mind the 1979 scenario where right now, as Wayne Jett said on this call, in September, I think the gold was about 250, maybe 270. I think he said. I don't know for sure if that's right. It was because it's kind of hard to get data back from 1979 these days. But it did go. September, October, November, December, 3 months, 4 months, it was about a 4-month spurt where it went from literally from about 270, 300 to 800, 875 by January. He thought it topped out in the summer of 1980. It was January the 20th, 1980. I know because I had, there was a guy who was a very good trader. He was a brilliant chess player and card player, and he was a professional gambler. And he took 20,000 from about 15 investors, and I put a few thousand in because I didn't have that much money available at the time. Mm-hmm. But he turned every one of those 20,000s in my little smaller amount into the equivalent. Into 1.6 million. Wow. On that run up. And I remember January the 20th because it was the night that all those people decided to have a party, which was a bad idea. When they were making so much money, instead they should have been focused on cashing in their chips, because 13 out of the 15 people ended up giving all of their money back to the market and then some. So it's a good lesson.
Well, that doesn't have to happen, but yet it does from time to time. Okay. All right, guys, we covered the Concierge Trade Alerts. We covered the Logic 247. Let's take a look. Now, let me just, I think we went over, I know there's 8 markets on the Concierge, and then how many alerts have we had, how many logic alerts have we had so far this week? Well, the first one of the week was number 2623, and then the last one I posted was 2635. So 23 to 35, so that's another 12. So about 20 concierge, 12 logic alerts that have all found their target at least once, or in some cases, as you saw, multiple times. So I don't know where you're at with your trading right now. But those alerts went out to every passport holder. So if you are looking to improve your trading, or you want to learn how to trade, go to eminitrainingschool.com, because all of those alerts that were sent to all of our traders and the Telegram channel over the last couple days, they could just as easily have gone to your inbox and you could have taken action just as they did. Okay, so Emini Training School.com. Now let me find the swing trades. Here we go. I just put out 1, 2, 3, 4 more. There's one out on the Dow, ES, NQ, and the Russell. Now, we had one on gold, and I kept posting charts and suggesting that folks head to the exit, because this is what it looked like. Okay, this was the original trigger. Went from 1537 down to 1528. So that's $900 per contract traded. And we got back above the trigger, and we dropped to 33. So that's about $400 per contract traded. Now let me bring up a live chart. See, here was the first trigger at 37, right there. So dropped $900 per contract traded, got above the trigger, and dropped to 1530 and a half. So that's $600 per contract traded. And I put several posts in the Telegram channel, and I showed a couple of charts, and I said, you know, guys, it would appear the market is finding support repeatedly in this area, which means, you know, good support leads to higher prices. So I asked everyone who was in that particular alert, I said, pull up your own chart. Given everything that I've said, you know, make a decision what you want to do. You want to take some profit? You just want to take all profit? I mentioned it a few times because I thought this was in the wind, and, well, there it was, in the wind. Now it's a done deal, as they call it. Okay. Okay. So that was number 16. All right. Then we had number 17. NQ. 7639 down to 7600. NQ. 7639 is right here. 7600 is right here. So that would be 39 points. Alexa, 39 times 20.
39 times 20 is 780.
Okay, so 780 bucks.
I'm not quite sure how to help you with that.
No, you did good, thanks. And then the Dow. Swing trade on the Dow was 26,245 to 26,100. So 26,245's right there, and then 26,100 is right there. So from 245 to 100, that's 145 Dow points. Alexa, 145 times 5.
145 times 5 is 725.
All right, so $725 per contract from the entry to the exit. And I think we had one more. The S&P. $29.03 down to $28.93. That's 10 points, $50 a point, $500 per contract traded. And 29.03 to 28.93, right there. Okay. This swing trade actually it ran the distance twice, and it gave two more profit opportunities in between the two that ran all the way to the final target. Okay. So there you have it. It's been an incredibly fantastic week so far, especially considering it's a holiday week. Concierge, excellent. Logic 247, excellent. And the swing trades, excellent. So we feel very blessed, very thankful. If you're not participating in any of this, I don't know why, but you know you're welcome, you're invited. So if you have a question, if you need more information, I mean, I know that everybody's in the markets because they want to, consistently make money every day. And there's nothing wrong with that. It's kind of what the markets are all about. Okay. So if you're not achieving your goal, whatever it is, let me just say, if you continue to do the same thing you're doing, you're going to continue to get the same results. If you want different results, you got to do something different. Now, I don't recommend you do something different every time you step up to the plate, but big picture, you got to do something different. Okay? Maybe we're not the right different for you, but all I can say, and past performance, no guarantee of future results. But you can look at our track record for years. Just go to youtube.com/CFRN, and the way I just walked through every alert, okay, I do that every day and have done it for many years. So go to youtube.com/CFRN, and if you need to get in touch with me, call 949-42-EMINI or send an email to support@cfrn.net. Hey, John, welcome back.
Hi there. Sorry about that.
No problem.
Boy, I tell you, when you look at what you've got there in front of you, you have not a very good recipe for the next few days, because look at the way this thing broke from last week, and then you got a gap down and a test, and it kind of looks like it could gap lower here. And I think the Chinese stocks are looking very grim, frankly. So a quick gander here. Yeah, they're kind of holding up, but if they were to break down further, it'd probably mean new lows for the Chinese stocks. And the Baidu, even though it had a bit of a bounce, it's not going anywhere since then. And I think Baba's, let's have a quick look at Baba. Yeah, Baba's a bit stronger, but it does look as if we're headed down, possibly to test that 2720 or so. If we do get down there, I mean, obviously, if this thing goes above the weekly range there that it's been hugging, then I think we might have to reassess it. But right now it's bounced off that previous week, the lower weekly range, a couple of times. If that gets violated, it might want to find its way down to the next week or two down below, and so that's what we're up against. And with the bonds going higher, unless there's some kind of news, economic news that comes out. I mean, if the bonds go down, that could help the market up, and it could also maybe help the gold up too. The other thing is the dollar. If this really is a reversal today, and the dollar continues to break down, that could help the market. Not necessarily today or tomorrow, but towards the end of the week, you might get a bit of a lift off the market on a weaker dollar. So, and actually, the oil market being down, that weighs on the stocks short term, because the oil stocks, might be dragging them things down as well. But obviously, lower oil prices are kind of good for the economy. And this Labor Day was the lowest prices in 3 years.
Is that right?
Those gas prices, yeah.
Wow.
So, as we speak, the VIX is. Why don't we look at the TVIX? See, that's looking.
There you go.
Yeah, you see that actually looks a little bit bullish, frankly. So you got a gap up
It's trying
today.
to turn.
Yeah, I mean, if this thing starts heading for 22, 23, 24, it really could go all the way up to 32, which means you're gonna get a pretty strong break in the market, pretty hard break, and the gold is sort of telling you there's trouble out there. And the silver. So, one other thing, you remember we talked about the copper? You might want to put the copper up, because that's actually quite. Remember we said it would break a bit more. It did, but it looks like it's turning. It looks like the
Here's daily.
Florida residents are getting kind of dodged a bullet here with this storm. Unless it sort of re-intensifies and slams into the shore. But
Boy, that's a real close call.
yeah, it's kind of interesting. CNN is running out of bashers because they had a couple of supposed bashers who they thought were going to do the right thing and criticized Trump, and the exact opposite happened. This guy, Lieutenant General Russell Honore, he was the guy who saved the day in Katrina and became a kind of a commentator every time there's a hurricane. And he's always kind of criticized and bashed everybody ever since, including Obama, saying that nobody ever did it right, did enough in these hurricane situations. Like he's the hurricane authority, if you like. He came on CNN yesterday, which I just happened to catch. And I mean, this guy, I was kind of saying, I couldn't believe what I was hearing. He said this was the best prepared response he'd ever seen to a hurricane. He said it was just unbelievable, the resources that they mounted and put in place. He was absolutely blown away by the whole thing and how well everybody was prepared. And, with all these, you saw all those electrical trucks that came in from all around, from
I thought that was smart, the way they staged them and had them ready to go out.
Yeah, brilliant, because, who wants to have the power out? That's a real big problem in the storm. So it really was, this guy, he and they were kind of waiting, and they tried to say, they'd ask these leading questions. Oh, I thought you were critical of Trump. He said, no, the guy's done an absolutely fantastic job. Of course, then they started beating him up for going out and playing golf. And I thought, if he's got the whole thing done, why shouldn't he get a few rounds of golf? Everybody else is off on Labor Day.
Right.
So that was the first thing. And then the other one, which is just mind-boggling, is the founder of the Weather Channel comes on. And of course, they thought that he was going to be all for the climate change. And he just basically said, listen, the whole thing is a hoax. It's just, there's no climate change. There never has been. And he says, I know more about it than anybody else. I founded the Weather Channel, and he said, all this, there's no scientific basis. We haven't been, we're not a degree higher. It's all a lot of baloney. I mean, it's
that's
epic.
Yeah, I guess. Yep.
Yeah. made me think of my geography teacher. And he used to say, you know, Britain has no climate, only weather. And that's it. You know, there is no climate, it's just weather, you know, basically at the end of the day. And you can't, and the other thing is, some other guy tweeted something out over the weekend, you know, 1 minute of a volcanic eruption, it might be more like an hour or maybe a year, but I would think puts out more stuff into the atmosphere than all of humanity combined. And that's the fact. You know, there's too many influences. Look, there's the ocean temperatures, which, you know, the world has a way of, as we've said before, of fixing itself. You know, there's times when the deep water, you know, one of the reasons why we've had these cold winters, you know, in Europe in the last few years, after having quite mild winters, you know, maybe a while back, is because, you know, the water, the very cold water comes up from the deep, comes to the surface, and it has a big influence over these things. and look at the cold winters we've had, with the Great Lakes freezing over and New York Harbor and things like that. I mean, these kinds of things haven't happened for a long time. So it's going to, you know, this next winter ahead, probably going to be the real test as to whether we really are going into some sort of a mini ice age, you know, as far as winter is concerned, or whether we're going to dodge a bullet and maybe, you know, have not so cold winters going forward. But I think if it gets really, really cold, you know, by November, and snowing and stuff, we might be in for another brutal winter. And maybe we're just going into a phase where I mean, we have had some pretty hot summer days, but they're not that many really. There's been a few extreme days, and that was about it. But at the end of the day, all this dread about famine and crops and all this, and people not having babies because they're worried about climate change. I mean, give me a break.
That's just ridiculous. Just ridiculous.
So, well, listen.
Thank you, Jim.
Thanks very much for the invite. And if you need any help with anything, give me a buzz regarding. Okay, right. Thanks a lot.
Thank you so much, Jim. Okay, guys, I got to run. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.